Hello, 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 each and every one of you. Good afternoon, good morning, good evening, wherever you are in the entire world. I'd like to say thank you for joining us today on the City Traders Imperium YouTube channel. Yours truly, Mandela here, and we're going to just be chilling out today because today is a bank holiday and it's the perfect day to launch a live stream like this where we can go through. I can give you a little bit of background about me, also share a little bit about the strategies and what this show has to offer in the weeks ahead. I want to start out by saying thank you very much to my team. So thank you to Andrew, part of the Signature FX family, co-founder of Signature FX. Also, couldn't have done it without Danny. So thank you very much, Danny and Scott. It's been a great pleasure working with you to get these shows up and running today. So today is a bank holiday in the US. We mainly do US equities and indexes. So we'll probably be just chilling a bit today, probably have a shorter show today, which is fine by me. But feel free to post in the live chat. We do have some City Traders Imperium. We'll call them CTI. We have some CTI traders who are joining us today as well. So kick back, relax, and let's see what's happening in the markets. I think the latest thing that I saw was oil looked like it was starting to move higher. This is on the back of what's been happening, what's been unfolding in the geopolitical instances over in the Middle East. So let's quickly pull up a chart of oil and let's talk a little bit about what's happening with oil here. And usually as a day trader, I'm looking at getting in and getting out within a matter of minutes. I also sometimes will take a step back and look at more longer term trades where I'm looking to hold for a few weeks to a few months. And that's what we'll look at today. We'll have a quick look at some of those possibilities today. So one thing that has been reacting well has been gold recently. Oil has been moving higher. I think the main story here, the main story with gold has been, main story with oil has been, is the US going to get involved? So there are different ways that you can get exposure to oil in your account. CTI has a few tickers, a few assets that you could trade. There's Brent crude, and there's also what they call light sweet crude. You could also do WTI. There are a few ETFs that I have highlighted here for anybody interested in doing more of an ETF route. So that will be kind of taking a basket of either oil companies, or you can do the physical as well. But we got a few tickers here that tend to react well when oil's doing well. These are their closing prices from yesterday. Obviously, today is a market closure day, so not a day where you're going to get any action. Let's have a quick look at what's been happening with oil. And I think the main concern is, will the US get involved? Will the US get involved? And I don't know the answer to that. I think there's probably a good chance that we find out over the next 48 hours if the US is going to get involved. There's been some sort of speculation out of President Trump whether or not the US needs to get involved. I think he's decided to keep his cards very close to his chest. And I think probably by this weekend, we will kind of see how that will unfold. But as a result, if we zoom out last 5 days in oil, last month in oil, I think we'll start to see some sort of clues. I think oil market is potentially waiting for some news to be more clear and less unclear as we kind of figure out what's the next steps where we're going from this point. So that's oil. I don't really want to cover too much about oil, except for saying sort of year to date, last year, last 5 years. It's definitely perked up with this Middle Eastern geopolitical situation, and I do think that it's very dependent on that. We're in a news-driven market right now, and I've been trading for about 20 years, off and on. Took a break here and there, but I don't remember a time when it's been so news-driven, and almost every headline is swinging prices around. The volatility is pretty insane. I'm not saying that there hasn't been a time like this before in the past, but in the last 20 years, I don't recall a market that was so focused on headlines, particularly the social media account of one individual. So we'll have to see. I think that's going to be really the driving force here. Also, so I think one of the thinking processes is, if the US does get involved officially, let's say, then what is their involvement? Relatively light or more medium or more heavy? And then following that, what is Iran's response? I think all these things are very much in play at the moment. So we'll leave it there. I think similar sort of thinking process in the gold trade as well. So last week, gold did move higher slightly. It's cooled off a little bit as there was some talk about, negotiations, ceasefire. Ceasefire was I think, a very good piece of news in the right direction. So seeing if we can continue that sort of course of action. Another one is silver here. Silver had been doing well also. If we look at the last month or so, silver's been doing really well. I like to look at the silver to gold ratio. So recently, gold has been doing slightly worse than silver as a potential sort of safe haven asset. So we see silver's kind of, as this chart moves down, that means silver strengthening in relation to gold. So this is just another sort of proxy that I like to use on a day-to-day basis. If we see this moving up, that means that gold is outperforming silver. If we see this moving down, that means that silver is outperforming gold. Just another sort of tool that you can use, especially if you're trading sort of commodities like silver and gold. So today, markets are closed. So pick the best day to start this. I feel like there's probably going to be a lot more in terms of content and analysis that we can cover during the live shows in the coming weeks. So the plan is every Thursday at this time, I'll be on covering the markets, trading live, and I'm still working with Daniel and Scott to get my CTI account up and running. But I will be trading live and taking trades that are presenting themselves live on the CTI YouTube channel. So those will be happening hopefully by next week. Thursday, we have everything up and running and ready to go. But for today, it's really just kind of explaining what this whole live stream is about. Who the heck am I, and what do I do? And then next week, we'll be starting to roll up our sleeves and get busy getting into the market and getting some trading done. So feel free, if you are in the live chat, we do have a live chat that is available. So please feel free to post in there if you're interested in sending a post for us. I think there's quite a growing community at CTI, and CTI is going to be celebrating their birthday very soon. So a lot of really exciting things coming out of CTI in the coming days. So please keep your eyes peeled on that. All right, so let's start off by, I'm going to start doing a little bit of a macro view. So top down, what's been happening, what are the scenarios? And I'm actually glad I'm getting to do this, because usually right now I'm going to be 4 minutes before the open, and I'm frantically trying to make sure I have my watch list, I have everything ready for that moment when markets open. Today, I'm able to kind of sit back a bit, take a sip of coffee, and ease into the day, have a look at where we've come for 2025. That's what we'll do, walk through where we've come for 2025, and then have a look and see as we finish up Q2 at the end of June, where do we see things sort of progressing from here into the second half of the year. That's some good coffee. All right. So interesting to think now, because we've had a lot of talk on tariffs, and we've had a lot of talk about what's been going on with Donald Trump and the back and forth. This new geopolitical, I don't know what we can call it, but this new geopolitical conflict, I guess, has started to heat up. Strait of Hormuz is being talked about. U.S. involvement is being talked about. And I do wonder, is this sort of the first act of this play, this Trump play? What is going to be the second act? Where are we going in the second act of this whole adventure? So let's have a look at the charts. And I'm going to do my best to keep an eye on the live chat. But let's start off with one thing I like to start off with is actually, you know what? Since we are live, I'm going to have a quick look and see if there's anything that we're missing from a breaking news perspective. I know charts are, that's an interesting post. Let's give that some love. Let's see, that's the home one. All right, this is my breaking news tab, which has become more and more vital over the last few months. Not seeing anything necessarily market moving, but we like to keep an eye out on this. We'll get posts about Donald Trump's announcements and speaking engagements. But looks like pretty calm so far. We'll keep an eye on this as the show progresses today. But this is kind of like what I do. So I'm looking at what's happening in price, and then I'm also looking and seeing, well, what's happening in news. What is potentially going to impact the price, and then trying to make a judgment call and react as best as I can in the circumstances. So yesterday we had Federal Reserve coming out and holding interest rates, which was widely expected. Tomorrow we have triple witching, which is the expiration of single stocks names. So your Teslas, Nvidias expiring. The quarterly expiration is tomorrow. You have index futures. So those roll over from June to September. That's also tomorrow. And you have index options, which is what I trade the most, and most of our community are aware of, and some of our community members do trade, which are things like SPX. So those all expire tomorrow. Tomorrow is going to be pretty spicy, especially since today nobody can do anything. So we'll be keeping an eye out on what happens tomorrow. All right, let's see. This chart is of the commitment of traders. So we cover this in our YouTube channel as well, and in our community. The commitment of traders report comes out every Friday, and it is a compilation of the positions of commercial traders who are above a certain threshold, and usually are made up of index funds, pension funds, institutional banks. They are red in these charts, and they are usually right. For gold, for example, the commercials would be the gold miners. The blue is large speculators. So the large speculators are the ones who are usually wrong. They have to report above a certain threshold with the CFTC, and they provide us with very good information about what to fade or what to do the opposite of, basically. So what does all this mean? I've just started trading. You're talking a different language. Basically, if the red is above this zero line, that means they are long or net long, and we want to follow them. If the blue is below this zero line, that means that they're shorting. And if it's the large speculators here shorting, in this example, the large speculators were shorting. This was Bitcoin. If we go back to October, so they were getting short and Bitcoin was moving up. They were basically on the wrong side of the trade, and the red was on the right side of the trade. So we can touch on this in the coming shows, but I know some traders use the commitment of traders, some don't. And I simply like to incorporate it to inform me of where the commercials are and where the large speculators are. And that kind of gives me one additional piece of information to help with my analysis on a day-to-day basis. Alrighty then. So I'm just going to scroll through some charts, and let's see if we got let's just go through. Just going to do a couple charts just to show you my thinking process. I think it's also helpful to kind of see where we are in terms of from a few months ago to now, and then I'll share some thoughts about where I think that we can go from here. All right. I see Andrew is in the live chat. Hey, Andrew. We got a show tomorrow, so if you are interested, hop over to the Signature FX YouTube channel. Andrew and I will be talking about triple witching. And we'll be continuing this sort of analysis tomorrow when markets reopen. So let's have a look at some charts, and we call this segment Chatting Charts. All right. So gold. So this is basically gold overnight. And what I try to do is I try and find out what was the lowest price overnight, what was the highest price overnight. So intentionally, I haven't actually dialed it in yet. But basically, if I was just going to eyeball it, I'd go like that. And we start here. If this was kind of like the close yesterday. And a reminder that gold is open technically today. And crypto obviously is always open. But despite the bank holiday, the public holiday in the US, gold is still kind of ticking over. So this shaded area is what I like to call the Asian session range. So it starts at the New York close, and it kind of captures all of this Australian Open, Japan Open, Chinese Open, Shanghai Open stuff. And then it also catches, so I stop it when Shanghai markets close. So that's effectively where I would calculate what was the lowest price ticked or lowest price reached and what was the highest price reached. And basically what we're trying to do in a nutshell, and I think this will become more clear as these shows progress, is, excuse me, basically what we're trying to do is we're trying to catch a breakout of the Asian session range. That's it. Not very sexy, not very complicated. There are a few things that go into it where you have to have risk management, which we will talk about. You have to have good position sizing, stop loss location, entry signals, kind of get into it as well. But the basic premise is I like to see consolidation overnight. So overnight for us in London, scorching hot today in London. Consolidation during the Asian session, and look for a breakout of the Asian session range, either during the London session or during the New York session. And that's essentially what the strategy is in a nutshell. All right. So let's zoom out. So this is kind of like a very, I think it's called myopic, a very zoomed in view. So what I'd like to do is zoom out a little bit here and get more flavor in your ear. There you go. So this is giving us a little bit more data. I can't see. Wrong button, clearly. All right. That's it. All right. Let's go one more. Here we go. Okay. So that's where we were. And what we've done is we've gone back now all the way to, looks like, where we hit the all-time highs. That was back on Tuesday, the 22nd of April. So it's kind of stayed in this sort of sideways range here. And I drew this trend line thinking I was being clever. I think I probably drew it somewhere around here. So we've dipped below this trend line. Definitely not something that I'm going to just trade blindly off of. But if we're looking at where we are in terms of the lows since April to the all-time high, we're definitely slightly closer to the all-time high. Gold's never been above this price here at 3,500. So what am I thinking? Well, we'll see what happens overnight. I'm not trading today because of the Juneteenth. Happy Juneteenth to everyone who is celebrating. But this is going to help to inform my decision in terms of targets. So entry, I'm looking for a breakout out of the Asian range. And then targets wise, we'll have a look. There we go. So targets wise, downside, maybe we come down here. These are some key Fibonacci levels that I've been watching. Alternatively, if we do get a break outside of the Asian range, then maybe there's a retest of it and then we look at all-time highs. So getting the entry from the Asian range and then using the other significant price levels as targets is kind of my style. So this is gold. Gold tends to be a go-to when there are when there's fear, when there's a general sense of fear, uncertainty, foreboding, worry, anxiousness. Gold tends to get a lot of love. So we'll have to see. It's very dependent on headlines and developments. I'm going to be the first to say that I am not a fortune teller. Unfortunately, that's not what you're watching right now. Not a fortune teller in any way, shape, or form. But I like to react to what the prices of the assets that I trade are doing, while using things like risk management and just patience, really, discipline and patience. So that's gold. Let's have a look at S&P because that's the one that I trade the most. So S&P has been on a rip-roaring rally since pretty much since the 90-day pause from Donald Trump. Actually, before I do this, I'm going to have a quick look at the live chat to make sure that I'm covering everything. Here we go. All right, so this is S&P 500 pretty much since the all-time highs back in February. All right, let's see what we got. Yes, so a reminder to please like and subscribe this video. And any questions that you have, please let us know. We have Andrew in the live chat. We also have the real FX bully. So big up yourself. Enough respect. We got Mr. Bay saying hi. And Andrew representing for the Signature FX family. All right, so S&P 500. I think most of you who trade generally are aware of the general narrative of what's been happening. We got all-time high in February and then came off pretty much after Trump's inauguration. This was the what is it called? Liberation Day, I believe, was here. So that's when Trump brought out that big piece of cardboard, held it up with all the numbers on it. And then we continue to move lower. This would have been a great buying opportunity down here. Then we got, where was it? I believe, is this a daily? No, I'm not on a daily. So in here was the 90-day pause when Trump said he's going to do a 90-day pause on all the tariffs. Came back one last time, taking out some of the stop losses, I believe. Anybody who got in here maybe was scared out there. And then we've been just, as they say, climbing the wall of worry. Everybody's worried about what will Trump do next. But the brave buyers have been pushing us up. And this is where we finished yesterday after the Federal Reserve held rates at unchanged. So where do we go from here? That's the question. That's the million, billion, $1 trillion question. I don't know. I do know tomorrow we'll get quite a lot of liquidity due to triple witching. So historically it tends to be quite unpredictable and quite choppy tomorrow. So we'll be keeping an eye out on that. I don't know if tomorrow is fairly uneventful and then everything shakes out on Monday. Maybe we get a big push, a big trend day on Monday. That's a possibility as well. But I keep it very simple. I trade my process, and my process is reset every day. So I react to the moves of the S&P 500. Sometimes I'll trade individual names. Shout outs to 1Y1M as well, doing earnings plays, doing swing trades as well. So there's a variety of different techniques that we will use, but I think the go-to is the S&P 500, and this pretty much tells the story of going back from February. Almost looks like the COVID V recovery. If we had to pause it and look at the COVID V recovery, very much, very, very close, very similar to that COVID V-shaped recovery as of where we stand. So we'll be watching tomorrow as markets open. I had a few more things that I did want to cover during this particular opening show, but if there's nothing else in the live chat, I think somebody's birthday is today, so let's see. Oh, happy birthday to CTI. Happy birthday to CTI. It's been great working with them. Like I said earlier, I have to give a special thank you to Scott and to Daniel, who I've been working with to kind of get this to happen, to make this show happen. And I'm really honored to be to be on here today, and the first of many is what I will say. The first of many. All right, so I have 6 other things that I wanted to talk about. Seven other things I wanted to talk about. One was that this is not a political show, so we are simply observing what the financial markets are doing and sharing our opinions, and that's exactly what they are, opinions. Also, remember, any trades that we take, any analysis, any stocks that we mention, they are not financial advice. So please remember that you are responsible for making your own investing decisions. I'm merely here to share what I am seeing and how I see it. So just have to put that out there as well. But yeah, thanks again to the whole City Traders Imperium family. As we get a few pings coming through now. Got a question here saying, am I going to be trading live on the show? Yes. So once the City Traders Imperium trading account has been activated, then I will be taking trades live on this show. And we'll see if we branch this out. We're definitely very, very motivated and excited to continue these shows each and every Thursday, live trading. Obviously, today is a exception as the U.S. celebrates Juneteenth. Okay, let's go back in. Just want to have a quick look at this tool here is Koifin. So we've pulled up Japanese yen. We got the gold there. We got BTC. You know what else we should probably have in there is oil. Take out yen. So this is over a 1-day period. Let's see, that's a 5-day period there. So outperforming is oil. I think there's some, just a little bit of apprehension about what will happen next and the implications of that. And I think it's very much a wait and see market going into tomorrow, into Friday. But as you can see, crude oil is the best performer over the last 5 days, followed by Bitcoin, and then gold is lagging out of those three. Right. Yes, a lot of good messages here. Question. So we got a question from Nasdy, and the reason I'm not able to respond is because it's on a separate platform. But yeah, let's get to that question. So Nasdy is asking why gold and Nas keep dumping. Well, that's a good question. Let's pull up. Here we go. So this is Bitcoin. I'm gonna pull up Nas. So I personally, I'll take one at a time. We can zoom out. So Nasdaq pretty much, it's a little bit more jiggy, but it's pretty much follow that same V-shaped recovery out of the all-time highs. I don't think that the Nasdaq is immune to what's happening in the Middle East. So my thinking process is, if the US does get involved and they attack Iran's nuclear facilities, then I don't think risk is going to be look very appetizing. So as a result, there could be some cashing in of profits. You know, people that were long or people who had calls way back in April, cashing in some profits up here. We are near all-time highs as well. So, I mean, if you're zoomed in and you're looking on a 1-minute chart, yes, it looks like it's dumping. But if you take a step back, take a breath, we've come a long way, a very long way in a very short time. So as long as Trump is saying maybe yes, maybe no for his involvement in the Middle East, I think that is definitely a risk to the NASDAQ. So we'll have to just wait and see. I wish I knew exactly what he was doing today. There is a site. If we pull up Trump's calendar, Trump's schedule, I think it's called. There we go. So for today, Trump's schedule's looking pretty good. Let's see here. So Thursday, we have, what's this? He gets his intelligence briefing. So that's going to be in about 2 hours. So intelligence briefing, that could be, I mean, it could be related to the Middle East. I would think so. But as a result, does he say anything publicly? Then we get press briefing by White House press secretary a few hours later. So probably after that meeting. And then President Trump participates in the swearing in ceremony of for the ambassador to the Republic of Ireland. So that's what we're looking at in terms of scheduled events. But who's to say that something, you know, there's some other announcement that's made last minute. There have been many times, like yesterday, Donald Trump was involved in a press conference for placing 2 flagpoles that he purchased personally. And then the press was asked, do they have any questions? And it became a proper press conference about the Middle East. So there, at any minute in time, any moment in time, there can be changes in a moment's notice. So that's why we like to use this tool here to try and keep us up to date. And then also we tend to look at Truth Social as well to make sure that the posts that we see are genuine posts, because you never really know. Looks like new wave of missiles has been launched from Iran towards Israel. So, I mean, I like to look for things that I would say would be out of the ordinary. So if something that we haven't seen before happens, or there's some sort of major announcement, then I'm looking at what's the reaction in the things that we like to focus on. So the assets that we do like to trade. So that's a long way, Nasdi, for going around and saying so Nasdi's comment was, why is gold and NASDAQ dumping? And I think as long as we don't know what the US's next move is, I think there is some trepidation and some caution here where risk appetite may be diminishing. But then I think at some point, maybe it's tomorrow, maybe it's over the weekend when markets are closed, at some point I feel like there will be some sort of decision. Maybe it's, okay, the US is not going to get involved. That's possible. But at least that gives us something to work with. Right now, we have absolutely nothing to work with in terms of what's next. And then gold, let's have a quick look at gold. All right. Here we go. So gold is cooling off a little bit. I think that one is a little different because gold tends to move favorably when there's the uncertainty and when there's the panic and the need for sort of like a safe haven. So they tend to be inversely correlated. Now, if we take a look at gold here, I don't think this is dumping, in my opinion, unless you're super duper leveraged and maybe you got in Monday, and you're underwater potentially. But I feel like we're still in a bit of a holding pattern here with gold, and I think it's waiting on that. What is the next move in terms of US involvement? Yeah. So hopefully that answers your question, Nasdi. Thank you very much for your post. We also have in here Dishi saying happy birthday. So a lot of positive messages saying happy birthday to CTI. So yeah, it's great to be sort of part of this journey. I've kind of come on a little late, but hoping to continue for many more birthdays to come, and really learning a lot about CTI, the family, and the organization, and what they've done to really impact lives. So for those of you who are not familiar with CTI, please check out their website and look through their YouTube channel for more information. Okie dokie. Right. So I think that's it for today. We got the overall sort of, I guess we could put some scenarios here, because people like that. So have a quick sip. I'm loving markets not being open and just being, just living. It's beautiful. I want to shout out to Jerry Soltis, one of the best traders that I trade with. So Jerry, big up yourself, man. Keep up the good work. I know you were posting yesterday. There was so there's a strategy on the Federal Reserve announcement. Actually, you know what? I'm gonna come back to the macro, but let's have a quick look at the S&P 500 from yesterday. So Jerry put me onto this strategy. It's an ABC strategy, just like Michael Jackson's famous song, Do Re Mi. And this was yesterday. Let's zoom in and get involved here. Okay, so basically, and we'll talk about this in subsequent shows, but this is kind of how I look at the S&P on a daily basis. We got the key levels, which end up being kind of like liquidity, points or liquidity levels. So sometimes you can pull this up and get an idea of where the liquidity is located. Basically, these are significant levels that I like to target. This was yesterday's open right here for S&P. And then we got a nice move out of the open. This is probably the trade that I like the most. And I didn't trade it yesterday because it was Fed day. I just watch it happen. And that happens. But yeah, this is kind of like my bread and butter. So what happened? So the Jerry special, let's get to that. So Jerry is very on it in terms of pattern recognition. He's doing a deep dive into options, Greeks and deltas and thetas and gammas, and I just sometimes I'm just in awe. So yesterday he was talking about, previously he's talked about this ABC pattern that happens in the S&P 500, usually after the Fed announcement. So what does the ABC strategy look like? So if we look here, I believe we got the announcement. Actually, you know what we'll do? The announcement came out yesterday at 3 London. So that was right here. And then, so let's say the announcement happened here. And then we went up first, came back down. So there's an ABC pattern. So the ABC pattern yesterday was down first, up second, and then down. And that would have been down first, up second, then down, or even down. So this is something that I've seen happen more times than not, where you'll get the initial Federal Reserve announcement here. So they held interest rates right on this candle, 3 p.m. London. And then we got the initial move down. And then the second move kind of scared everybody out who was short and holding puts or who had a short bias. They all got stopped out. And then magically we've refound that down, or we basically had a second leg lower to give us that C move. So it's A is the real move, B is the pullback, and then C tends to be the real move again, or a continuation of the first leg lower after a pullback. So just something to be aware of. I've looked back at a few charts and I've seen this play out. Now, I know the critical ones amongst us would say, well, yeah, but what happened here at the end? I mean, if you would have entered this trade, you would have made your profits. You would have hit your whatever targets you would have had. You would have been able to at least extract some funds out of the markets with this strategy yesterday. And it's not going to be perfect. It's never going to be super duper easy. That's not what we're doing this for. So if you see this pattern, then I think you can use it to your advantage, especially on days when the Federal Reserve are announcing their interest rate decisions. So I can go back. I have a few charts where it's happened before. And I can kind of pull those out. Actually, let me think. Let's see. All right. So yeah, I'm not going to go back now. I do have, so basically going back to last year's meetings in March, April. We've done back testing on it, and this tends to be a very reliable strategy. A lot of people want to know the why. Why does it work? So my theory, and it's just a theory, is when you get that news announcement. So once you get that initial Federal Reserve announcement here, then there's almost like there's a relief. There's like a certainty. Okay, we know what the interest rate's going to be. It's going to be the exact same. So the first move is very impulsive. This is where the liquidity wants to go. This is where the market really wants to go. And we'll discredit that or just ignore that for now. It ended up closing down here. And then they realized very quickly that a lot of people are trying to chase this. So this would have been, this is a 5 minute. So 5 minutes after the announcement, everybody else is trying to come in late and FOMO in, and they get tricked out or tripped out, stopped out, or tested. Maybe they stayed in. And then roughly around here is when the press conference starts. So you'll get Federal Reserve press conference 30 minutes after every single time. And that's when we got the down move. So shout out to Jerry for highlighting this and being a very adamant proponent of this ABC strategy. That's very, very evident. All right, so let's go back here to some scenarios that we could have for the rest of the week, and then we'll wrap up the show. So this is where we finished up yesterday. And so tomorrow, one thing that we could do is just chop around. Remember, it is triple witching. So we could just kind of stay in a fairly narrow range tomorrow. It's not going to go that long, obviously, but this is kind of just giving us an idea of what could happen tomorrow. And it's not nice, not pretty. I probably wouldn't trade this, but it's a possibility, and you have to kind of be prepared for any eventuality. The next one that I would probably say is what a lot of people may be expecting is where we get a nice sort of trickle higher, maybe a pullback, and then having a look at the all-time high, maybe tomorrow, maybe. Not that far off. I think we're about 2%, 3% off the all-time highs. Maybe we don't reach it, but at least have a look at it. Have a look. To make a new high here on this recent move is definitely a possibility. So I think this is probably going to be the one that people aren't really expecting. Because of all the negativity in the Middle East, I think there are more people who are going to be either short or neutral tomorrow. So this one I think is probably the wild card. And then lastly, as a scenario here, is maybe tomorrow we start off a little choppy and then we dribble lower here. So maybe we test this trend line that we had, or maybe move a little bit lower, pull back in, and then move lower again. That's also a scenario. I think this one will probably play out more so if there's some negative news. So sometimes bad news is bad for markets. And this is an instance where if we do get some bad news, it could be taken as bad for markets as we go into the weekend. So that's a third scenario that I'm going to be preparing for tomorrow as well. And like I said, I don't predict, I react. So as the price is moving, as the price is breaking out, I want to react as quickly as possible. And we'll be talking about that tomorrow as well on our YouTube. All right, let's see what's happening in the live chat. We got, let's see here. All right, so we got Nasty, we got Andrew saying happy birthday. Nasty says, thank you so much, but do you think it will reverse and back to long? Okay. Andrew says, some great questions. Mandela is the chat GPT for trading. I didn't understand that earlier when I was trying to multitask. I get it now. So hi to RDM. RDM is also with us. Andrew saying drippy, drippy. And glad to see everybody here. So I'll just touch on Nasty's question. Nasty's question is, do I think that gold and NASDAQ are going to reverse back to long? So I think I covered that when I was talking earlier about S&P. So the scenarios here on this one, I think that covers NASDAQ as well. And it will cover gold as well. So I think that I sufficiently covered that. But thank you again for all of the questions. All right, getting up to 5 minutes after 3. I think that's basically it. Yep, City Traders Imperium, the best prop firm for growing traders, learning traders. Make sure to sign up. Also, like and subscribe to these videos to keep us going and to keep the motivation going as well. Unless there's any other questions. Oh yeah, Nash is in there. Okay, so Nash is a personal trainer. He's also a wicked trader. Personal trainer, wicked trader. So Nash says, just saying what's up, bro, and appreciate this. Yeah, man. Yeah, I'm enjoying it, man. I'm enjoying it. Well, first off, I'm liking that the markets are closed. That's great. And then, yeah, it's good. It's nice to kind of to be on a different platform. We have our Signature FX YouTube channel that we've been growing, and to have this ability to kind of share on a different platform, different community, for me is just, it's phenomenal. And it's being able to spread the information, also learning from each and every one of you in the live chat. The questions that you're asking is also helping me to spur my thought process and to get me to think through things as well. And that's extremely valuable. So the first show of many, they call this the pilot. So I didn't intentionally want to do it when the markets were closed. It just happened to fall on a holiday when the markets are closed. But if you do want me to cover anything, I'll give one last opportunity for anybody to post in the chat. If not, I'm gonna probably wrap it up, and we'll be back again next week, Thursday at the same time. The only difference is markets will be open. So I'm trying to see if there was any other news. I mean, sometimes I do trade IPOs and things like that. So there have been some really crazy moves in the IPO market, which to me is kind of like, wow, like I wish I would have gotten in a lot earlier. So let's pull it up here. So I got a couple IPOs that I've been eyeing up. CoreWave has just been mentally insane in the membrane, like crazy moves. So ticker symbol Charlie Romeo Whiskey Victor, up since the IPO 335%. This was when it was born as a public company, and it has soared. So yeah, just one to be aware of. If you don't trade IPOs, maybe now's the time. I mean, I didn't catch this. I'm kind of watching from the sidelines in awe. And it was even strong yesterday. What was it? Yeah, yesterday was a fairly weak day for the not a great day for the S&P. But let's see if we go this way. Yeah, it was down 1%. Okay. But it's definitely held on to its gains since the IPO. This looks like it started 26th of March or something like that. So yeah, I mean, we're always looking for alpha. We're looking for value. Every day there's going to be different stocks that are moving more than others. We have various tools that we use to try and identify what's moving the most during that day. And our job, we continue to say this, shout outs to Shannon Thompson. Our job is to extract funds from these markets, whether you're trading crypto, S&P, CoreWave, oil, gold, NASDAQ. Extract what we can and then come back tomorrow and do it all again. Yeah, that's it. I feel like I should be talking about something that's moving right now. Nothing's really moving right now. So we'll leave it there. Yep. Thank you, everybody. Thank you again for joining the first show on the CTI. what's on the CTI YouTube channel. Thoughts on the futures. So we got a quick question here from Nash. Thank you very much for your question. Thoughts on futures and its movement here with Israel and Iran. It's down now. What's some advice on that? And lastly, how do you feel about CRCL? Okay, good questions. Very good questions. Let me have a moment. Okay, so we have futures down at the moment. No surprise really there. We had yesterday, what was it? Was it yesterday? Let's go to futures. Okay, so we got futures down. Here we go. So I didn't pop it up. There we go. So yesterday was a fairly flat day, I guess, in the end. We're looking at quite a few moving parts. So a lot of uncertainty. It's unclear what Trump's next move is going to be. So at the moment, I like to be in cash in my trading account. I don't mind being in cash here. One thing you could do in terms of options is you could kind of do a straddle. So shout outs to Ryan Rabane, introducing me to SPX in the first place, and the straddle king, I would say. So putting yourself in a position where if both sides of the straddle, so your calls and your puts, they're not going to hurt you if they go to zero. But if we do get something to move markets in the next 24 hours, so something happens tonight or tomorrow morning, then you're able to you have some exposure. Yeah, that's how I would play it personally. So I don't trade futures. I know Andrew does. So Andrew trades futures. I would personally, how I would approach it is get a straddle. So I would get S&P straddles. I would get calls and puts expiring probably tomorrow, maybe even expiring on Monday. Because if we get a major news announcement on Monday or on Saturday or Sunday or Monday morning, then you're able to still capture that move and have some exposure. There's been a lot of times where I've been completely in cash, and then there's an announcement from Trump over the weekend, and I'm my hands in my pocket, not exposed, and just watching everybody else participate. So I would do that. I would do a relatively low risk straddle, and if we do get an announcement of some seismic magnitude, then one of your sides of your straddle is going to really pay off and in effect cover the costs of the wrong side or the expense side. So that's that. I think that will probably change. So the futures will probably change if and when we get an announcement out of the White House. But for now, we're in a holding pattern. Second question from Nash was CRCL. So let's pull that one up as well. That's on the other list. Levels. All right. Circle. So I like Circle as well. Some positive news on the stablecoin front recently. Some passing of some legislation, and this one's a baby. This is a baby. Oh, so cute. Oh, so cute. Hasn't been trading for very long. I think the theme is a good one. I think crypto is going to continue to kind of push. I feel like crypto is trying to decide now whether it's a risk on asset or if it's a safe haven, because I feel like some days it trades like a safe haven and some days it trades like a risk asset. Anyway, it'll decide. It's a safe haven asset that sometimes considers itself a risk asset. that's where it is now, in limbo. Circle, I think definitely, I mean, the market speaks for itself. I mean, if we're looking strictly at price, funds are flowing into Circle. That's quite clear. Even yesterday was yesterday was a flat day on the S&P, and Circle ripped. And I think it's on the back of that news. So I like it. I'm glad that you mentioned it, Nash. One of the things that I'm working on, so two things I'm working on. One is trading more IPOs, and the second is to try and move quicker with breaking news trades. And that's something that I've always kind of struggled with. I feel like once the breaking news is out, I feel like everybody knows about it, and I get kind of sticky. Like I get kind of in my head. So I think something like Circle, we knew that the regulations were coming down the pipeline. Once that regulation hit the news wires, it takes off. And so that's something that I'm working on as well. So I'm very glad that you mentioned this ticker for us today. And it's something that I think a lot of traders could really benefit from. One thing I also like to see is when the S&P is down for the day, so the overall market turn is kind of flat to negative, and you get something that's just rip roaring pumping like this, that's saying something. So will I buy it tomorrow? Probably not gonna buy it at the all-time high, and that's just not my style. But yeah, I mean, if this pulls back a bit, then maybe dollar cost average something. So yeah, we'll see. But I do like it. We've been talking about it for a while in the lead up to the IPO, and then I don't think anybody thought that it was going to perform as well as it has, but it really has kind of taken the lead and done a great job. So definitely one to keep on the watch list. And if you don't have it on the watch list already, definitely want to pop on the watch list. All right, that's it, everybody. I'm gonna call it a show. Thank you very much for watching. Please, if you like the show, just punch the like button. It helps us to continue to grow and to continue to put these out. And also subscribe to City Traders Imperium. One more big shout outs to Scott for getting us to connect today and get us to share on this platform. Next time we will be trading live, and we'll be doing basically what we're doing today, but markets will be up and running. So with that, everybody, I'll say have a really good Thursday. If you're trading Forex markets are open, crypto markets are open. So please be safe. And until next time, I will bid you all adieu. Take care and